And you're watching Business Incorporated live on Channels Television. Here's what's coming up on the program. MRS All Nigeria PLC schedules a shareholders meeting to approve voluntary delisting of the company at the Nigerian exchange. And South Africa's Financial Sector Conduct Authority approves 75 institutions to be licensed as crypto asset service providers. Plus, we assess the impact of Zimbabwe's gold-backed currency, the ZiG, on the country's local bourse. Great to have you join us. I'm Ladi Williams. First off, let's kick off with the markets now, starting with the oil market. We're seeing a lot of volatility right there in the oil market with Brent and WTI. We see mixed sentiment right there. It was down earlier, but we see an uptick about 0.29%. $88.68 a barrel. That's for Brent crude. And we see WTI crude trading at $83.62 a barrel. Was trading about $82 yesterday. So we're seeing some kind of uptick at this time with the U.S. strategic reserves falling more than expected at this time, raising demand for oil and also increasing the prices there. Let's get a check on gold now. We see gold prices crept higher today, but we're stuck in a narrow range as investors look to U.S. economic data for further clarity. We're expecting U.S. GDP data that's coming up on Thursday. We'll see how that drives sentiment. Gold trading at $2,330, down 0.50%. So we're still seeing that downtrend in the metals market for gold. Silver holding on to $27.20. And palladium managing to hold above that $1,000 level. This week, investors are focusing on U.S. data, and that will tell where these commodities, where the prices actually go at this time, even though we're seeing a lot of profit-taking right there with gold. And bringing it down here now, the Chartered Institute of Bankers of Nigeria, they've held its 2024 annual lecture in Lagos. The meeting, which explores the availability of credit to the private sector, was an opportunity for participants to highlight the major issues and importance of liquidity and chart ways to reduce bad debt. Our correspondent, John McQuarrie, reports.
Lecture. Improving availability of credit in the Nigerian real economy. The critical importance of liquidity is apt as it speaks to one of the major imperatives for real growth and development.
The theme of the 2024 annual meeting of the Chartered Institute of Bankers is an intentional effort to capture the realities of the real sector. The audience, made up of bankers, their regulators and associations, government officials and other players in the financial sector, listen as factors which affect credit availability to the private sector are explored.
Nigerian banks are heavily challenged in navigating the cosmos of financial risk of all hues and shades, including liquidity, operational, regulatory, and reputational risk, among others.
For an economy where over 90% of businesses are graded as small, their welfare cannot be overlooked in a conversation like this.
Funding is not a critical need of SME. It's important. But more important is the fact that you need to build up the structure, you need to build up their capacity. You need to capacitate that industry as much as possible to help them to be able to know the right kind of funding that would be relevant to their businesses.
In January 2024, the Central Bank of Nigeria reports that credit to private sector increased to 80 trillion naira, indicating a 93.77% increase year-on-year. However, access and cost of funding still remains a challenge for the MSMEs. John McQuarrie, Channels Television News.
And now to our first conversation, we see point-of-sale transaction values saw a downturn in Nigeria for the first quarter of 2024, registering a 225 billion naira drop when compared to the corresponding quarter of the previous year. And we're going to highlight what's driving that and currency outside banks. At this time, we see Joining us is Sarafuddin Fasasi, is the National President, Association of Mobile Money and Bank Agents in Nigeria. Join us from Abuja. Great to have you.
Good afternoon. Yeah.
So with the data we're seeing right now, we're seeing a significant decline, about 7.94%. Fall in the use of POS systems for transactions within the country. What do you think is driving or drove this drop?
Okay, thank you so much. It shouldn't be surprising for us to see that drop. It is expected. It is an outcome of policy, wrong policy. We are all aware about the tragedy of currency design, redesigned, which actually squeezed out a lot of POS operators out of business, and for the fact that a lot of players are also having what we call a sort of mistrust. There is a mistrust in the generality of banking services. So for drop in POS transaction, it is expected, and it is triggered by regulation issues. After the cash redesign challenge, I think CBN also announced the issue of KYC, update on bank accounts. And as we have the understanding that most of the POS transactions are actually being driven by the fintech companies, and they are usually on wallet system. And the policy of KYC upgrade is really affecting mostly the wallet system providers because they are not carried along. So they were not prepared. The industry stakeholders are not prepared for all these policies. So there was, you need time to build infrastructure, to develop an application that will capture BVN verification, NIN verification. As of today, a lot of providers, they have shut down, growth in wallet creation because they are battling with how to comply with emergency policy of KYC.
Right, quite interesting there. Definitely everyone needs KYC at this time. But, despite the downturn in POS transaction values and volumes for Q1, there's been an uptrend in the registration of POS terminals during the same period. So we're seeing a drop, in POS transactions, but an increase in POS terminals. What does that tell us?
Most of this data are aftermaths of series of events. So what the data is speaking to is not the present. So data is speaking to what has happened in the past, the build up, to the present. So in terms of infrastructure, which is the POS, they are usually pre-orders. They are usually pre-planned by service providers. So a lot of them actually have their projections year on year. They have placed a lot of orders. They have, business plan, a growth plan, which they are already implementing. A lot of them have placed orders, before now. So before the tragic regulatory, policy, caught up with them, which actually, threw everybody off balance. And it is what we are seeing in the data today. It's not of today because, a lot of people have planned, a lot of investors. I really pity the service providers because, and I think going forward, I think the CBN and our regulators should see regulation as stakeholders, agenda. And before they come up with certain policy, they need to sync with every players. So that they will not just be investing in the lagoon. So it's so unfortunate. So the terminals that you are seeing today, they were pre-planned of the growth because we're all motivated to grow this industry. We have a gap of about 26% in financial inclusion, and that was what all the players planned towards, of increasing the number of POS terminals. You can see additional 1.1 trillion, 1.1 million POS terminals, in the country, but we can't deploy them. Service provider cannot deploy them because of currently a lot of them have put a pause to wallet creation and customer acquisition. So they can't deploy it. So it's either today you will see an agent outside there with 5 POS terminals, 10 POS terminals, on the same spot. They are not doing more than 20 counts of transactions. So it's a waste of resources. I pity the investors. So, and that is caused by, the regulation that is not bringing all of us to the table. Yeah.
Definitely we've had issues with POS charges. How are you seeing POS charges at this time? Are the prices within, the threshold you would like to see?
Okay, charges on POS has never been a problem, quite all right, because access is critical first, is the number one, than thinking about affordability. And I think as of today, most of the charges are actually not, so extortive in nature, because Association of Mobile Money and Bank Agents in Nigeria, we are paying attention that normal customers are not being, extorted. So we advise on regular basis on how much to charge at POS locations. So it's also a function of cost to serve because there is inflation. POS operators are also, in the same market, buying petrol, transportation, data, paying the cost, high cost of interest rate of cash. Those are the additional costs. But we have been working with our members to be more reasonable, and I think they have been more compliant. So we don't have a challenge with affordability. And part of our work is actually, but the trend that we have observed is those areas where we have high excluded rates. In the ruralness, because of cost. Most of our agents are shutting down in most of those rural areas. Across the river, all those difficult terrains where there are no bank branches, but agents cannot break even, and they can't increase their prices. So we are trying to work with the industry stakeholders to see how we can incentivize, and because inclusion shouldn't be in the city; it should be in the rural areas. So that is where they are needed. But we have to work around incentives. Thank you.
Yes, and let's look at currency in circulation and currency outside banks. Now, we've seen a growth in the proportion of currency, held outside the banks, and it suggests a deepening trend of cash retention by Nigerians. At this time, we look at the data there. It says cash outside bank that jumped substantially in the first quarter of 2024. Currency in circulation also rose in the first quarter of 2024 by 163%, 276% rise. That's in January and February alone. So is it that we're seeing people hold cash more at this time instead of leaving it in the banks?
Okay, thank you so much. I think this is also expected. It is expected. We need to actually work on there is a need for us to reverse the mistrust created by the cash redesign policy. As of today, because we have not been able to take some strategic steps to heal the wounds of that cash redesign policy. A lot of people got their hands burnt. They took their money to the bank. They couldn't withdraw the money. So they have lost faith. And that has actually increased the exclusion rate in Nigeria. You will be shocked by the time another EFINA report will be out about the exclusion rate because all those policies of the past are actually showing in the data of today. So when people are not actually having that belief in the banking system, a lot of people are doing cash transactions now. So cash are actually exchanging hands. It's about the trust issue that people have in the banking system. And we need to really agree that there was a problem, and we need to really amend our ways and to work, with all the agents, all the financial literacy players, to reverse this trend. We need to be able to start the conversation again, the engagement again, and let people believe in our banking system. And luckily enough, I think NIPS has really worked on the issue of, bank transfers, bank transactions. The failure rates have dropped tragically, no decline issues. So I think we just need to engage more players at the level of AMBA, and Association of Mobile Money and Bank Agents in Nigeria. We have been doing a lot of advocacies to let people realize that their money, they can actually come back to the banking system. And another challenge is that currently now a lot of them their accounts are not updated based on the KYC that NIN and BVN should be mapped to bank accounts, and that is not happening today because we need to create an access point for people to have access to NIN, BVN, and most importantly, to be able to marry the databases of the two databases, because you cannot link the two databases to a particular account if you have not done what we call modification. So if your name is different, the arrangement of your name in BVN is different from that of the NIN, you need what we call modification. And modification is not available, it's not accessible at the rural of the ruralness. Over 300 local governments in Nigeria without bank branches. So we shouldn't limit modification to the banks. And that was why AMBA rolled out neighborhood financial inclusion centers and positioning in those excluded local government. But we are still appealing to NIMC, and we are also discussing with NIPS. Can you release those critical services to those centers so that our people can have access, modify their data, then they can be able to link it to their bank account, and their bank account can be reactivated. Yes. And also remember that a lot of bank accounts were locked during cash redesign policy. I am an example. The bank needs to go back. That why are these accounts linked up to today? They need to reactivate those and allow people to have trust in the banking sector and bring their money into the banks. A lot needs to be done. The stakeholders need to be talking to themselves, and we need to see regulation as stakeholders, process. It should be as a matter of a lot of engagement, not just a top-down approach of dish out the policy or the industry must comply. You need to find out, are they ready? Are your providers ready? Are the agents ready? Are the customers, are they ready? Have you done proper orientation to them to believe on the policy that you are trying to roll out? So we need to try to be, approaching these stakeholders. And we are lucky that presidency has seen this, and they have put up an office of the financial, special advisor of financial inclusion, and they are coming up with a stakeholder workshop. That's the program that will be happening tomorrow, where all stakeholders are being summoned to come and have this conversation so that we can, resolve this problem. Then we can move forward in driving, banking system in Nigeria, financial inclusion in Nigeria, so that we can actually grow these numbers again.
All right, thank you so much.
To go back to the old days.
Exactly, it can be a real headache, trying to, make corrections, when it comes to data with public services. Well, thank you so much for coming on, Mr. Sarafuddin Fasasi, National President, Association of Mobile Money and Bank Agents in Nigeria. Thank you.
Thank you for having me. Thank you.
All right, we'll take a break now. When we come back, we'll head straight to the markets. Just stay with us. All right, let's get a check on the markets now. We see the local bourse marginally down. Will has the details at this time.
Yes, we're seeing that shift, volatility going on with the NGX. I think they don't even know where they want to be. They don't want to be in the green. They don't want to be in the red. Yeah. We're seeing that shift up and down movement, but we just wait to the close of business to know where they finally settle
we'll get a decision.
Yes, the decision will be taken then. So we'll just begin, as always, with major equities in Africa, where sentiments were mostly positive. Mostly negative at intraday. Nigeria's NGX started off with negative sentiments, but swung into green territory and at intraday and back into the red. Quite volatile session for that index. 0.01% at the time I checked, but right now we're seeing it at midday. It was about 0.04%, still at 99,000 points, barely hanging on to that level. And we see South Africa's GSE is up 0.57% at intraday. We also see EGX 30. Let's look at the EGX very quickly. We see the EGX down massively at intraday, 2.85%. And with analysts, market analysts did say that the market was going to correct to about 26,000, and we're seeing that correction already happening. But Kenya, let's see what they closed at yesterday. They closed up in the green. There's a rebound there for that index, 0.32% up at as a close of business yesterday. Now let's check out activities at the NGX. What's driving sentiments at intraday? I'm going to be talking to Onose Asote Enaholo, is investment analyst at Main Street Capital. Good afternoon, Onose. It's good to have you on the program.
Afternoon.
Onose,
thanks for having me.
What's driving stocks? What's driving sentiments at intraday? Can you tell us right now?
Well, right now we see banking stocks are driving the highest volumes and values, which is expected. Banking stocks have been driving a lot of the volume recently as investors seem to be offloading shares. We know we've seen FPIs moving out of the equities market. So we see GTB, value of about 1.9 billion so far at the intraday. 55 million shares volume being traded. GTCO, Zenith Bank, and UBA, those are the top three banks. And then you have, MTN driving value and Nigerian breweries. And of all these banks, only Zenith is slightly positive. GTCO is in negative, UBA as well. We also see sales. So I believe that's what we see, and that's expected. Given what's going on in the market, even with banking stocks, we've seen some dividends being paid, but those dividends at the current prices, they are not attractive. I mean, why stay in Fidelity to get 7% yield when I can buy a 90-day Treasury bill for much higher than that? So these are some of the decisions that investors are making, and we're seeing play out in the market.
So it's still going to be negative. As of now, as we speak, it's still negative. That's correct.
Yes, we're still negative.
Okay, so let's just look into a matter that is quite interesting. Seeing a lot of the listings happening at the NGX, and one of it right now, MRS Oil PLC has revealed plans to delist from the NGX. The oil company has already scheduled a shareholders meeting to approve the voluntary delisting of the companies, from the NGX. And this is because this is coming after 54 years, being a publicly quoted company. Why do you think the company is delisting now after 54 years on the NGX? And from what he said, is moving to the unlisted securities exchange, and that's the NEST.
Well, let's paint a picture first. Let's look at what has been going on with all companies in Nigeria. Last year, we saw Shell selling off onshore assets, right? And then we saw Total selling off onshore assets, and even if you look back, a bit longer than Shell and Total, you see Ardova, even though that was because another company came in. So on one end, we see hints that the oil market right now, doing business in the Nigerian market, in the oil sector, may not be as easy as it once was. We have transport costs rising, the general cost of doing business, rising, and it's not out of the blue that a company might want to, well, not delist, because a stringent business environment isn't really so much of a cause. Now, in their memo, they said keeping up with compliance and sustainability and things like that. Now, you don't have to look at some of the reasons why a company will delist. One, it could be that they're trying to reorganize their share structure. It could be market conditions, which we see in the Nigerian market. It could be privatization. It could be because they might want to start a certain line of business that they may not be able to if they are on the NGX. Being on the NGX, you are beholden to a lot of compliance. Basically some compliance and a lot of stringent rules. Okay. And you might want to start off a particular. That might not have give you enough flexibility to actually do certain things you want to do. Now, we don't really know what that is right now, but those are just some of the reasons why, MRS might want to delist.
Okay, we also see the company, the total shares that MRS has now is about 342.88 million ordinary shares, 50 kobo each, and the deal is expected to be executed via share buyback and share capital reduction. How is this going to play out, especially for the latter, with respect to shareholders' equity interest in the company?
Okay, so I think at this point, the share buyback should hopefully take out most of the minority shareholders where, then buy back shares. I believe I heard the buyback price was about 135 naira, which is currently around what MRS is trading right now. Share capital reduction. Now, it could go on in a couple of ways. The major way is they could either cancel shares or they could either write down the nominal value of the shares. It makes sense right now for them to either maybe write down the nominal value of the shares or maybe even cancel a couple shares. If they do cancel a couple shares, that would possibly increase the value of each share, right? Because the share buybacks, they don't necessarily always affect the general market cap. Now, if you have that scenario where they're buying back shares and then they are canceling shares, so each share is now more valuable. Now, if they are moving to the NESD, each share could potentially trade, at a higher price at the NESD, and that could be a way for them to actually raise funds right now. Because if they do want to, raise funds to perhaps even bolster their businesses, this would be a good way to do it, seeing as raising debt is really expensive right now, and people might not really be keen to going into the equities market given everything that is happening right now.
So you talked about the impact of the share buyback that is not going to be quite significant at the NGX or for the NGX. But MRS is one of the big guys in the oil and gas sector, in that sector of the market. And its exits will lead to, 46.29 billion naira wiped out, of market capitalization removed from the domestic bourse. We've seen Adova leave. We don't have a lot of oil companies listed on the company. Total is left. And O&O is kind of shaky. What's happening there? We're going to be seeing, what impact do you think this is going to have on sentiments, and how are investors reacting to this news currently?
Well, right now, I won't be surprised if investors might want to, maybe for the short term, stay away from the oil market. I mean, even if you look at the last week's performance across all sectors, while some sectors were down, like the banking, insurance, and all, the oil sector closed flat. If you look around other oil companies, you see pretty minimal trading going on, right? Maybe except for O&O, which is currently seems to be in a free fall. But that is to be expected, because when you have an oil company that has delisted, you have two oil companies that are divesting, and then you have one that's coming back to delist. Investors are like, okay, look, what's going on with oil companies, and it just seems like right now things might be a bit shaky. Now, looking at the wider market, yes, 46 billion market cap is a lot, but when you're looking at the entire the entire bourse, the entire bourse can absorb that, as a general, the total market. But then it's just investors. I wouldn't be surprised if investors are going to be really cautious, with all companies right now, which unfortunately might now make it, even a little more difficult for, other, all companies when it talks to like maybe their share capital. So it could potentially be something that starts to spiral. We hope that isn't the case, but we can just watch to see what happens.
Yeah, the oil and gas sector does need a boost there. We have to leave it there, Onose. Thank you so much, Onose Sotie, now law investment analyst with me in Street Capital, for sharing your insights on the program. Let's check in on the Middle East markets now. Major equities in the Gulf traded mostly positive at intraday. The Tadawul was the sole loser. That's the Saudi exchange was the sole loser at intraday. We see Abu Dhabi up 0.13%. Dubai also up at intraday 0.29%. Now, still within the region, Saudi, as I mentioned earlier, was the sole loser. It was down 0.16%, and the Qatari index was up 0.15%. Now, the Saudi's benchmark index was hit by a 0.5% fall in Al Rajhi Bank and a 1.4% decrease in Riyadh Bank. Let's check in on the U.S. markets now. S&P 500 futures head higher in early trade on Wednesday trade. We see that index. Investors are assessing the latest financial releases from corporate America. Futures tied to the broad index was up 1.2%, while NASDAQ 100 futures popped 1.59%. Dow Jones Industrial Average futures also traded in positive territory, 0.69%. Tesla coming in at 13% in extended trading yesterday after the company announced a renewed push in more affordable electric vehicles. But it felt that, top and bottom line, it had a miss in terms of expectations from investors. So let's quickly look at what performance was yesterday. Enough chat about Tesla. Let's check out yesterday's performance with Maria Bird.
The U.S. stock market had its second day in a row in the green, as the Dow Jones was up at 0.7%. The S&P 500 even better day at 1.2% up, and the heavy tech NASDAQ was up at 1.6%. It is clear that many investors are hopeful that we will see an upward swing for the rest of the week. Many tech stocks are showing a rebound, even though companies like Tesla are still a bit struggling. But investors are still hopeful and watching to see what the next days and weeks ahead will mean for the U.S. stock market.
Asia now, let's see, Japan's Nikkei 225 led gains in that region. We see 2.42%. That's quite a milestone for that index. Kospi in South Korea, 2.01% up, not far behind. And the Hang Index in China, 2.21%. A lot of gains for that region. Let's look at Shanghai Index, what it performed at the close of business. Very quickly, the Shanghai Index, we've seen that we could have the Shanghai Index up there. Well, it's not coming up, we'll wait for that. But we've seen a lot of things happening there. The Shanghai Index was also in the green, 0.76%. And the S&P ASX in Australia was down for that region. That's the sole loser in that region, and we're hoping that they have a rebound following their inflation data that came in for the country. So, Ladi, we're expecting, Australia to pick up, but we're seeing inflation numbers affecting sentiments there. But the region is doing pretty well, and, not bad for U.S. markets as well.
Asia at this point, looking at that close, but definitely all eyes on the local bourse at this time. Is it going to get above that 100,000 level or not? We'll definitely find out. Thank you so much, Will, for the update. All right, now let's take it on to London now. Let's get a check on what's happening there. Juliana joins us from our London studio. Great to have you, Juliana. So we have data there. See, UK to spend 2.5% of GDP on defense. That's by 2030, and that's according to Rishi Sunak. Why are they looking at spending so much on defense?
Good afternoon, Laddie. There's a lot to unpack here. And of course, last week I was away in Washington. So you spend, goodness, more than 24 hours away from British politics. You miss almost a year of developments. And it's been a really busy couple of days for Prime Minister Rishi Sunak, who, as we speak, has just wrapped up a joint news conference with the German Chancellor Olaf Scholz in Berlin, where he has been delivering a statement on the announcement that was made yesterday in Poland, where he visited Jens Stoltenberg, the NATO Secretary General, alongside his counterpart, the Polish Prime Minister Donald Tusk, and the UK Defence Secretary Grant Shapps, to make a pretty significant announcement. I think the amount of money that is going to be spent over the next 6 years on UK defence spending is the biggest spend that this country has seen in a generation. And I think it falls to one thing, really, which is the architecture of Europe, which has come under significant strain in the past 2 years since the Kremlin have waged war on Ukraine. Already, the British government have delivered £2.5 billion to Ukraine, one of the biggest donators to the war, this country. And yesterday, alongside the announcement of the increase in spend of military, the Prime Minister also announced that he'd be sending another £500 million to Ukraine. So like I said, there's a lot to unpack because, of course, on the surface, you can understand why Rishi Sunak is doing this. There is a war in Europe. There is war in the Middle East. And it certainly feels as if, you know, those who oppose the British way of living are gaining in strength. And I think it was notable that Rishi Sunak mentioned yesterday in his presser with Jens Stoltenberg, Russia, North Korea, China and Iran. They are apparently the biggest threats to British democracy. He did tell those listening that Britain isn't at war, but it does want to prepare for a war. And I think if you look at what's happened in the past 2 years, if any NATO country was at war with their current defence package with Russia, then they would run out of artillery pretty quickly. And of course, Britain and Germany do not want to be in that position, which is why both of them have announced an increase to 2.5%, which is really just about where NATO would like their spending to be. Very quickly, because I know we're running out of time, it is worth mentioning that in the presser that's just wrapped up in Berlin, lots of the reporters in the venue were asking about Donald Trump, who, of course, is the former US president, currently on trial in a New York Manhattan courthouse over those hush money allegations. But, you know, he is still in the running to become president of the United States. We know how he feels about the war in Ukraine. So I think there is certainly a fear that if Donald Trump does become US president, then, of course, the tectonic plates of the world do shift. And Europe need to make sure they are armed to the teeth, shall we say, to ensure that what's happened in Ukraine doesn't happen to any other country in Europe.
I guess geopolitics still getting most of the attention at this time. But we see UK's biggest mortgage lender, that's Lloyds. The profits have fallen about 28%, and that's in the first quarter of 2024. How are you seeing this data?
Yeah, it's quite a significant slump for Lloyds, which is Britain's biggest mortgage lender, also the owner of Halifax Bank. They have just released, as you said, their trading update for the first quarter of this year, and it's not looking good, although it is very much in line with what Citi analysts had forecast. And that's really because they've been struggling in the mortgage sector. We know that from when Liz Truss was in power, only for a short amount of time, it caused havoc within the mortgage sector. And mortgages or mortgage products did become more competitive, and Lloyds during this period have lost out on that. Also as well, there was lots of pressure from regulators and from politicians asking, pledging, demanding UK banks to start putting in the profits they were receiving from sky-high interest rates back down to consumers and those who were banking with them. So Lloyds, of course, have had to do that, and they have struggled. They were used to being the supreme mortgage lender, and it hasn't been that way. I think they are forecasting, however, that they expect Q2 profits to be up to where they were, perhaps not this time last year because of sky-high interest rates, but certainly in line to where they were pre-COVID. Also worth mentioning as well, Laddie, that Lloyds have said that they expect house prices in the UK to rise 1.5%, which is in contrast to what they said at the end of 2023, where they thought this year house prices will fall by 2.2%.
Well, I guess maybe windfall taxes for the financial institutions at some point. Well, we see the FTSE 100, is close at a record high. How are the markets looking in the UK at intraday?
Yeah, the markets are in tip-top shape. The blue chip index has gained about 43 points since the start of early trade. So the UK blue chip, the FTSE All Shares, up 0.49%. The FTSE 100 is up by 0.57%, and the FTSE 250, the domestic market, that's up by 0.03%. In the currencies market, the British pound is currently trading down against the US dollar by 0.11%, also down against the euro by 0.01%, and down too against the Japanese yen by 0.01%, Laddie.
All right, I guess the weakness, that's in the currency market at this time. Thank you so much, Juliana, for the update. All right, let's get a check on Europe now. I see German car makers have had problems for a while now as they struggled with moving from combustion engines over to electric cars. Then they started facing stiff competition out of China. Now they have restructured their business. Well, let's hear more now from Lars Holter from Berlin. Good to have you, Lars. So what's the latest on these German car companies?
Thanks for having me, Ladi. It's actually quite impressive how the trade show has changed over the years. Like you said, this event used to be all about big machines, turbines and such. It was all about how to build them and how big they can be built. And today it's all about how to build them cleaner and more sustainable. The green energy transition is playing a major role in Hanover, as is AI, of course. That is maybe the #1 topic these days. And it's also something that Chancellor Olaf Scholz tried out when he opened the event at the booth of German industrial giant Siemens. He tried to interact with a robotic arm operated by AI, and that went just about as well as you would imagine. Scholz wanted the machine to go faster. He said it a few times, and nothing happened. Well, eventually the thing sped up a bit, but it was all a bit underwhelming. Let's hope this won't become a symbol for this year's event, or even worse, for how Germany will fare in that sector in future.
I see cutting costs is one way to, increase profits, of course, but how about selling more cars?
Well, engineering is still a solid business here. It's bringing in around 250 billion euros in revenues. That's actually up from 200 billion in 2020. So at first glance, all is peachy, but actually analysts are expecting a decline this year. And the question is always, of course, are we keeping up with other countries? Chancellor Scholz seems to know this, and he says he wants to work towards the country investing more in research and development, including by changing the rules on how the German retirement fund works. Scholz wants the government to be allowed to invest monies in that fund on the open market. That's more risky than traditional investment in government bonds, of course, but it could bring a better return on investment, and it could also direct more money to startups and other businesses who might need funding. He also wants to motivate Germany's most wealthy people to invest more actively. Don't know exactly how he wants to do that, but it would obviously be a great opportunity for them as well as for the industry, especially small and innovative companies in the fields of tech in general, but also AI in particular, can have a hard time sometimes having access to the capital they need, and any improvement here would certainly help.
All right, Lars Holter, thank you so much for giving us those updates. All right, let's take it on to other stories now. See, Egyptian authorities have committed to stopping sidestepping, that's finance ministry, to borrow billions of dollars directly from the central bank. We see that's according to the International Monetary Fund, but such borrowings risk undermining the economy by expanding the money supply and fueling inflation and causing the exchange rate to weaken against foreign currencies. Egypt's central bank in February had lent as much as 765 billion Egyptian pounds, to state agencies other than the finance ministry, an apparent breach of a 2020 central bank law. And to another conversation now, we see Zimbabwe's new currency claims it's wiped out more than 330% gain on the stock market. That's the Zimbabwe stock market this year, leaving investors dealing with the fallout. The Zimbabwe Stock Exchange All-Share Index is down about 99.95% since the introduction of the ZiG. That's a short for Zimbabwe Gold. Let's talk to Patrick Barr, Abankwa, global investment consultant, join us via Zoom. Great to have you on the show.
Thank you for having me on your show.
Right. So we know, in the U.S., when the dollar is strengthening, we know equities markets normally go a different direction. But now we're seeing in Zimbabwe with the strengthening ZiG, that's impacting the Zimbabwe Stock Exchange negatively. Why is that?
So we need to look at the post-ZIG and pre-ZIG. So before the new currency was introduced, we all know that Zimbabwe has been one of the countries in Africa that has their currency depreciating at a very high rate. So they were experiencing hyperinflation in the country. That meant that people in the country didn't see keeping the local currency as a safe haven for investment because the value loses its value over a longer period of time. So most of these investors before the ZIG had to now look at what other options do we have in terms of saving our hard-earned currency. So most of these investors had to switch to stock because that was a better avenue for them to hold the value of their money. Now, then comes the new currency, which is the ZIG, which is actually gold-backed currency. What it means was that the value of that currency is likely to be more stable than the local currency that they used to have. So most of these investors now are looking at the new ZIG currency to see that, okay, this is more stable. Why don't we try and switch our investment from the stock market to the ZIG new currency? And that has led to most of these investors selling off their stock within a matter of weeks. And that has led to the stock market in Zimbabwe, going down drastically over the last 2 weeks or so.
I would say most African currencies seem to be under a lot of pressure, right now against the dollar. Is the gold-backed currency route the answer at this time? Maybe a short-term answer?
I don't think it's a long-term project in terms of solving the challenges that most of these African countries are facing. I see it as a short-term measure. In principle, it's very difficult to be able to do that because the ability of using gold as a means of stabilizing your currency has its impact on the credibility of the government. If the government is able to maintain a bit of credibility when it comes to gold reserves, then that becomes a very good initiative going forward. Again, I think a diversified and growing economy is essentially the way to go in strengthening your currency. So African countries should not see it as the bus stop in terms of solving the challenges when it comes to depreciation of the local currency. I think it's just a matter of trying to stabilize the situation in the interim and looking at a longer plan to be able to stabilize the currency over a longer period of time.
What would you say is the answer, at this time with this currency issue? Is it time for Africa to start looking at maybe one currency?
The issue of one currency for me may not also be the right answer because the conditions in various countries differ. So for me, in terms of the approach, I think that the first thing has to do with fiscal discipline. Governments upon governments across the various countries should look at how they can reduce their budget deficit and control inflation within the country. That is, for me, the first thing they need to do. Again, the central banks of various countries should look at using monetary policy to be able to tame down interest rate and foreign exchange interventions. And that, for me, is also very important. Then, again, we are looking at economic diversification. Most of these countries should look at ways that they can diversify the economy so that the issue of dollar having a major impact on the inflation of the country will be reduced. Then again, we should create an enabling environment for businesses in the country so that they'll be able to expand, employ more people, and most of the things that they produce will be used in the country. That is able to tame inflation growing up in most of these countries and causing their currencies to be stronger than what we are seeing at the moment across the sub-region.
All right, thank you so much. Always great having your perspective. That was Patrick Barr, Bankwa, Global Investment Consultant. Thank you.
Thank you, sir.
All right, let's get a check on what's happening in other markets now. See Bitcoin still holding up. Fear Greed Index showing it's still a greedy market at this time, 72 points over 100. That's how investors feel right there in the crypto market at this time. Let's look at the price of most of the major cryptocurrencies we track. We see the colors mostly green on the screen and pockets of red at this time. Let's look at the top cryptocurrencies that we track now. We see Bitcoin holding up there above that 66,000 level by $328. We also see Cardano, that's going down 4.49%, and Ethereum holding up about 2.50% up. Let's look at some of the headlines in the crypto space at this time. We see the U.S. is seeking a 3-year jail term for Changpeng Zhao. That's the former CEO of Binance Exchange. So prosecutors in the U.S. are looking to give him a 3-year jail term. And also, remember that they actually paid, Binance actually paid about $4 billion trying to remedy the issues that they're having right there in the U.S. Then we see in South Africa, the regulator is licensing 75 crypto service providers, at this time. So they're giving out licenses to some of these crypto platforms springing up in South Africa, and they've seen the regulator giving about 75 licenses at this time. And we see Philippines SEC had ordered Binance app removal on the Play Store platform, at this time. So we're seeing a lot of regulatory issues there for the crypto space at this time. Let's bring in Rume Ofi now, financial market analyst. Hello, Rume. Hello, Rume.
Hello, Ladi.
Fantastic. Great to have you. Great to have you, Rume. So, yeah, it's all about regulatory clampdown right now on most of the cryptocurrency exchanges. Binance and other major exchanges right now operating in some African countries. And right here in Nigeria, we're seeing regulatory pressure on Binance and most other exchanges. Talk to me about this P2P market. How is it really used for illegal activities at this time?
All right. Thank you very much, Ladi. The P2P market has been for a while now. Not just, can't just say it's used for illicit transactions for criminal actors. People just use it most especially to pay for stuff on the internet because it's more like a synthetic dollar, right? USDT, So I think the challenge we have here in Nigeria is the fact that a lot of people actually use that to benchmark FX market and most likely the black market, But again, where bad actors now come in is where illicit transactions, that is money, proceeds of fraud, money laundering, all of those terrorism financing funds have a way of finding their destination to that transaction, to those platforms, So, but as far as the industry is concerned, we're not happy about it. That a couple of things are happening in this industry right now, most especially in Nigeria. The industry globally is growing, and it seems that ours here is taking a few steps forward and a lot of steps backward. The reason why I said this is because if we had done a huge structure, if we had a good sandbox way back in 2021, we would have gone a whole lot way better than now. I think I must say this. The then CBN governor, I beg your pardon, didn't do well for the ban in cryptocurrency transactions from the bank. It would have been a way for us to call all of the players to say, oh, this is what we want as a government so that we can go forward and also meet up global standards. Or, peradventure, go and give us your regulations and we'll put it side by side with what we think and make sure things work out rather than leave it open, because when you ban it, you give opportunity for illicit guys to jump on and do some certain things that you may not be able to manage effectively. I think that's what is going on now, and it is not really looking good because there are also good players in the industry.
Right, definitely still a developing story at this time. We'll keep tracking to see how that P2P market, evolves going forward with all the regulatory crackdown we're seeing at this time. Thank you so much, Rume Ofi. Always great having your perspective.
Thank you, Ladi. Always a pleasure.
All right, there you have it. That's show today, and that's how the markets, major markets that we track, are looking at intraday. We're looking forward to the close for the local bourse. Know which direction is going to go for this week. Remember, you can visit channelcb.com for more updates. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.